What's up YouTube, it's Louis here, hope you're all well. Today we'll be looking at Bitcoin on the daily time frame, and as we can see we had a very nice daily candle close, and as we were saying a good few weeks ago, back on the weekly time frame over here on this doji, as soon as this appeared we had said that we hadn't lost this as support, so we need to wait for the next week. But this is a sign, usually when you're at support, a sign of a reversal. So this could be the start of the pump back up to here. We then tried to lose the low, but we did not close this week below this wick over here, and so you're still essentially holding this green box as support. And so a few days before this weekly candle closed on the Friday, I'll let you guys know that this, if it ends the week as it is, it's a spinning top and it closed as it is. And so that right there was the go signal, the signal that we're going to come up and retest this minimal, and we've done so with today's pump. And it looks like that we're heading back towards 18.1k. And guys, yeah, we can still go up to 18.6k, but we need to understand that this area, this red area, it's a 1k range. This is resistance. So before the end of the week, that's what we for the end of the week, you know, the Sunday weekly close, this is actually what we're more interested in. So it just means that during the week we could be going up, but we could be going down for the end of the week, the weekly candle close, to prove that this is resistance. Let's see going forward. What I would say is that we're coming towards a 12 EMA. I just want to see if we've tested it yet. No, almost there. So that's lining up with about 18,346. This is going to act as a resistance on the weekly time frame. So of course, if we do hit it or go a bit beyond it, hitting 18.6k, if we do actually go beyond this, understand we could still see a weekly candle close below. So yeah, that's what we're waiting for now. But so of course, if we're waiting for that, the expectation is we're going to keep going up basically. So on the daily time frame, this was our daily close. And remember, what do our guys talk about every single day? What time frame are we looking at? The daily time frame. So this is a strategy that I teach about in my course. That's 50% off at the moment. You can get that offer if you private message me over my Twitter. There's a link underneath this video to head over there. And essentially, because we're on the daily time frame, every single candle has a very specific meaning. So here has a lot more accuracy when you see a specific candle. But yeah, it's all about the placement, and yeah, it has to follow all the rules. We're not just trading because of a specific candle. There needs to be more to it, more confluences, and confluence is just different parts of technical analysis that are agreeing with it, with each other in alignment, and makes you believe, okay, it's bullish or it's bearish or it's going sideways. So over here we had a good bullish signal over here of this green spinning top, or bullish hammer, we can say, off the 20 EMA, and so this would be a buy signal. So well done if you took it. If you're a student of mine, you definitely would have been able to spot that yourself, and if you took that trade, well done. So yeah, that trade would have been, in one day you could close it off right now, a 3.78% move, and the signal would have been at midnight last night for me, because I'm in the UK, so GMT. It's whenever this green candle was over here. Can you see how it says 8 p.m. 8 p.m. at the bottom down here? This is because the candle opens at 8 and closes at midnight. So if I go to the next candle that's red, you can see it opens at midnight. So that's not the daily candle close, that is that one there. So yeah, you can see during the day we were below the EMAs, and then we reclaimed them. Can you see over here where we previously formed the bullish cross and you came under the EMA? So that's a bearish indicator, bearish sign, because we're running into the 200 EMA. If we want to continue up, we need to hold these EMAs. You can afford to lose a 20 as long as you hold the 55, and this will give us chances to go up. Can you see it did give us a chance? We formed one bottom, another bottom. This was our neckline, the 20 EMA. We did break above the 20 EMA, but we didn't hold it as support, so that's why we didn't continue up to hit. We then lost the 20 and the 55, and if we kept on hitting our head, we should have continued lower. So the fact that you got back above it, and you see how this bullish cross had formed over here, you nearly lost that, so it nearly formed a bearish cross, and that's a negative sign. That's going to say, oh, we're going to continue lower. So we invalidated that by climbing above the 20 EMA, causing this slingshot action. I told you, I've spoken about this on the channel before, and of course, if you're a student of mine, this is all taught for you. So yeah, you guys would know exactly what I'm talking about. That's what's beautiful about the course. It's, of course, currently discounted for the rest of the year, 50%. And again, the link to my Twitter is below if you want to message me that for that discount. But yeah, when you're learning it, you guys will be able to follow these videos along very easily. And yeah, it's just like a free course essentially once you've learnt it, and you will be able to understand. Okay, when you're on YouTube, because you've learnt it, you have a source that has everything to teach you. You'll be able to spot who's basically a good trader and who doesn't know what they're talking about. So over here, can you see we reclaimed it, and it's called an EMA repel, as I've spoken about in the past. So you get the slingshot action, and we've essentially seen the same thing over here where you lost the 20 and the 55, which is bearish. So what you want to see is a confirmation. This is a breakout. That's a breakout trader if you took that. A pullback trader would be waiting for the confirmation to continue lower. You had no resistance confirmation, just quickly reclaimed it, confirmed its support, and that was a beautiful signal right there. So when we reclaimed the 20 EMA, we had something called a doji, and as it's coming off this support, it's usually a sign of a reversal. Why do I know this? Why is this a signal that we're going up? If you're a student, you'd understand this. But again, what did we say on the weekly time frame when we spotted a doji at support? Let's head over back to the weekly time frame. If you are enjoying this video so far, please do support the channel and also boost the algorithm by liking, subscribing, commenting, and yeah, of course, sharing the video. So remember, on the weekly time frame back over here, a good few weeks ago, maybe a month ago now, we were saying that this over here is a doji and it's at support. You haven't lost this, so it's usually a sign of a reversal. So we saw that on the weekly time frame, and remember, the higher the time frame, the more accurate the technical analysis is, or the charts and the Japanese candlestick patterns, the specific candles. And so yeah, as you can see, you reverse from here, and that would be a percentage gain of about 10%. You've gone up, let's just say 10%. And so that's on the weekly time frame. You've seen 1, 2, 3, 4 weeks straight after because of that signal right there. So if we go back, I think to the 4 hour, yeah, we saw that signal right here on the 4 hour time frame. And so for the next 2 candles, we've gone up. So that would have been your buy signal right there. But yeah, also the daily candle close right here. So it just pulled back after breaking out, and then it pulled back and held its support with the doji. And that's why we saw this continuation over the last 8 hours. But yes, of course, we've got 9 hours of the daily candle left. And we need to remember that this red area is resistance. We can, of course, continue higher, but just understanding that there are going to be key resistances, especially because the FTX capitulation began over here. So I'm going to have to measure from the beginning to the end down there. And we can see the golden pocket. We're about to head into it between 18.2. And what was that 18.2, which we spoke about earlier? We'll go back to the weekly time frame. 18.2 to 18.9 is saying that this is a brick wall. On top of our red brick wall already, we've got this orange one now that we're facing, and also the 20k psychological level. As you can see over here, this is where we found our higher low on the bullish cross when we did form it, but again, taken away from us by FTX. So yeah, even that's a key resistance. We need to take this all out, get above it, flip into support. That's when I'll start to be bullish, at least in the very short term, until about 27-30k. That's when I'll again start to look to short or to get out, whatever you guys are doing. But going back to the weekly time frame, flipping on that 12 EMA, zooming in again, we can see that the 12 EMAs exactly lining up with the 050 fib, and it's just saying that this is a key resistance. If we're ignoring all the drawings, just looking at this, looking at the EMAs, if you were to actually get above this 12 EMA, you would have a quick pump to about 20k. So just realize that it's a weekly candle close above 18.364. You'd have to wait that as the final confirmation. You might already be above it. Again, for the weekly close, you could be below it. But yeah, I would personally wait for the weekly close to see if it's going to close above this, and then you've got a potential trade on the weekly time frame of a 8.5%. But yeah, turning the drawings back on, just before the 20 EMA, we've got the 12. We know that this is going to act as a resistance. If it doesn't, it's onto there. This will be a resistance as well, lining up with the 786. So it's interesting because if you've been tuning into the quant videos, you'd know that I've been talking about how quant dipped a lot and is retracing, and it could go up all the way to the 786, and it could still get hammered down eventually. So you can actually go to 20k and still go lower. So yeah, it's not just about the 618. You can go a bit deeper. That's where the 20 EMA is, and you can still get knocked back down. Okay, you would need to invalidate that. You need to find support over here in the golden pocket and then go up again like this. Okay, a lot of work to do, but it's good signs. And I hope some of you took this trade, whether that you spotted that yourself because you've just been following along on the channel and you've just been finding free value, or you are actually a student of mine. Remember, my course is 50% off. I will also offer you a discount on my mentorship, which is my one-to-one help. I'll give you 10 lessons, 10 hours of my time. I'll give you the course, 10 hours of my time, and the Discord group chat. If you want more information on that, please private message me over my Twitter, and the link to that is down below. Thank you guys so much. Like, subscribe, and comment. And if you are a member, turn on the notification bell on YouTube, but also on your phone, so you actually get the notification for the early access videos. You can get the videos early for your altcoins. Thank you guys so much. Peace.